What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 86, and we are lucky to have Kathy Hall back on the podcast this morning for a Q4 recap and Q1 2023 overview episode. Good morning, Kathy. Thanks for coming on again. Happy New Year.
Well, Happy New Year to you. Thanks so much for having me. And hopefully I will see you later this year in the studio. But for now, I'm coming to you live from New Jersey.
Beautiful. Yeah, that'd be great. We'd love to have you. I think one of the prerequisites of you coming, we'll bring one of those big ethylene maps. If you're watching the video version here, you see a massive map of the ethylene market behind Kathy. It's very, very appropriate. I'm a big fan.
Well, it came in handy when we had our winter freeze with the winter storm Elliott. So by way of introduction, my name's Kathy Hall, and I am the executive director for Petrochemicals for Petrochem Wire, which was a company I founded in 2007 and is now a part of Opis, which is one of the Dow Jones companies. So at Petrochem Wire, we focus on the U.S. monomer markets of ethylene, propylene, benzene, styrene, and also the primary polymers. But, again, they are the biggest end use of those markets. So the polyethylene, polypropylene, polystyrene, PVC. And in 2008, we introduced these maps because I remember there was a string of hurricanes and I was thinking, well, if this plant is shut down, what does that mean? And I thought, who has a map? And I couldn't really find one. So I made one. So we have one for ethylene and for propylene, and I still use them. With the winter storm Elliott that gripped Texas pretty much on Christmas, that was it was an interesting event because a lot of refineries and chemical complexes were affected. But to kind of jump into it, Ben, where we left off, you and I last time in September, was looking at an environment where there wasn't a whole lot of bullishness on demand. And the end of the year is usually an inventory destocking, behavioral cycle. So, it takes a lot of supply control to keep stability. So a winter storm that compromises a lot of production doesn't necessarily result in a price spike in that environment, especially for this one, it was the last month of the year. So, obviously plants were affected, but I don't see that there was a panic that ensued, but rather, a tightening to an extent of markets that were not tight.
And obviously you hear Winter Storm Texas, everyone immediately has nightmares back to what was a year ago, 2 years ago with, I think, Winter Storm Ian, if I'm not mistaken. Uri. Which obviously caused issues for far longer than anybody guessed. So I'm sure as you start putting those words back together with a new winter storm, you hear some people have some nightmares come back up from that whole situation.
Absolutely. Just like, the Hurricane Harvey, even though it was 2017, that was an extremely slow moving hurricane that went through Texas and really flooded almost every refinery and chemical site in the state for a week. And like I say, it was, this summer, it'll be 6 years, but that type of thing, when you think of, storm or weather preparation, Winter Storm Uri shut every single plant in the state. And, for just the knock-on effect of workers that couldn't go anywhere because a lot of residential homes were damaged. And, it was, so Elliott was not quite the catastrophic event that Uri was, but it certainly did compromise enough production that it was measurable. But in this environment, it didn't move the needle much. If anything, it kept prices supported to stability in a market where they were facing some weakness.
Yeah, absolutely. So let's start a little bit with a Q4 recap. Obviously, October, November, December 2022. I know on our side, things were certainly a bit slow. I think some of the seasonal slowdowns, inventory management kind of started a bit earlier, and we certainly saw a slowdown. Obviously there's normally a slowdown, I think, between Thanksgiving and Christmas with people doing inventory and destocking and things like that. But I think we saw that start a bit earlier. But on your side, what did you see for Q4 in general? How did the raw material markets look and the derivatives you follow, things up, down, sideways to round out Q4?
Sure. Well, I think it was, in my opinion, what a lot of people hoped for, which was there was no extreme volatility. That, of course, prices did move. We had energy prices up a little bit. And then, of course, your aromatics would follow a lot of that because costs would increase. But we didn't see any extreme swings. We didn't see anything at all like we saw during the summer, which, it felt, I remember in the summer feeling like I was watching an out of control market. And also when you think back to different memories in the reverse, because we're coming up on that time of year, that period right before the Lunar New Year or the Chinese New Year holiday, that in the I guess it was the 2020 market, that's when many markets worldwide saw historic lows. Ethylene was 8 cents, for example. So, so looking at the lack of volatility, I personally think that was a welcome factor in the market, and it allowed companies like yours and, a lot of suppliers and a lot of consumers to manage inventory in a controlled way to their expectation, because they didn't have to contend with a sudden price spike or, a ripping sell-off or something in December. So there was, there's still a lot of similar conditions as we saw before the quarter started in September. We still, of course, have the European energy prices are higher than they are in the States. I think that while we have not seen the shipping and logistics and freight situation turn into the chaos that it had maybe a year and a half ago, rates were rising, and that compromised arbitrages that would otherwise work. So, so that's where I think that there were no sudden moves. And I think that was beneficial and reasonable for a lot of companies to end their year in a way that they had predicted.
And it seems like stuff not only was not volatile, but I think kind of trickled down. It seems like oil prices have come off a bit. Obviously, especially in the U.S., nat gas is off pretty significantly compared to it was last time we spoke 3 months ago. So things definitely trended kind of consistently downwards, it seemed, in general, to round out Q4.
Yeah, no doubt. And it's interesting when you see natural gas prices decrease, even though it's the, in this hemisphere, it's the cold part of the year. So, that all of that mostly speaks to demand, in my opinion. And we could see this for all of our downstream products going through, plastics and the downstream xylene products as well. And the different, parts of the phenolic chain and MMA and whatnot, that it's not as though demand is depressed, but, demand is not there to support your price increase. Demand is not there to give sellers any advantage. So, so any measure to preserve value, I think, came from the supply side this quarter. But, that was unsurprising. And there, again, despite the storm in the States, you had producers that had the option to roll back production. I think certain segments of the market, certain polyethylene trains and polypropylene trains, they were down to 80%, 70%, and that environment, when you're not looking at strong demand, but demand, you're not especially chasing demand, you can comfortably roll back. The shipping situation, I know for ethylene in particular, there were a lot of exports coming from the US in October and some more in November, a few in December, and most of them went to Asia. And I think that that's largely stopped. I think that there has been, it feels a little bit familiar from the start of the pandemic, looking at Asia in terms of how it's responding to us, surges in virus cases, how that affects the plants there, the ports, very importantly, and looking at first quarter can be a little strange depending on when that Lunar New Year falls, right? So, the any pre-stocking or pre-New Year decisions are really played out, and then the New Year being at the end of January, we'll see 5 weeks, 4 weeks could be a long time in terms of what's the Port of Shanghai doing, for example? What will that look like in the middle of February? And, that will really bear out what the rest of the quarter is looking like, in my opinion. But
sure, absolutely.
In a lot of markets, the U.S. is the low cost market still, especially for ethylene and NGLs. But in benzene, we did see that the U.S. is one of the higher price markets right now. We've seen shipments that typically from Asia, they've become limited over the past month. We've seen just general demand throughout the world for benzene derivatives fairly muted. So it's difficult to point to any driver besides cost. So that's where your sell price or your offer might hover at a place that is necessary due to cost, but nobody's really chasing this material around. So, as a result, there's not a lot of activity. And I think that because, at this point, we're really just 1 week into the new calendar year, that there hasn't been a strong impetus to make any moves, So if we're saying there haven't been a lot of looking at the spot markets, none of them have seen any tremendous activity, with the exception of U.S. ethylene, which had a banner day during the winter storm. In ethylene, if you get 40 trades in a day, that's a big deal, right? So
right.
Certainly, in crude oil, that's not, that's no 40 trades in a minute would be a slow day. But so to have, a couple of days in ethylene where there was a little bit of what I'd call a buying frenzy, if that, is in fact due to certain parties trying to cover for short-term outages caused by weather, it's not the same thing as demand. Right. That's picking up pounds that you owe to somebody else, for example, or picking up pounds that were owed to you. But with the exception of that, I think that worldwide we haven't seen anybody come off of the offer or come off of the bid, and that tells its own story of it becomes a little bit of a standoff, I guess you could say. Who's going to blink first? Who actually needs to either dispose of the material or consume, who needs it more? Who needs the sale more? Who needs to consume it more? So I think we're in that mode right now. But that has, it has created, in my observations so far in the past week or so, a little bit of stability and not a lot of nervousness out there.
And specific to oil and gas, obviously both have kind of trended downward since the last time we spoke. Do you have thoughts for Q1 on what oil and gas will do specific to the U.S.? Do you think things will kind of continue at these levels? Do you see the cold weather kicking back in and trying to bring raw material prices back up? What do you think about kind of the oil and gas markets for Q1, both normally what happens in Q1 as well as kind of what's going on generally in the industry these days with what you think might happen?
Sure. Well, I think in the U.S., there have been general forecasts that that energy prices will rise during the quarter. And in the U.S. in particular, a lot of this, the oil price predictions are predicated on driving season beginning, weather improving. So I think that there's also an expectation of stability for natural gas, as there's no real call for extreme cold weather. And if prices are ticking along where they are with today's weather, you're really looking at, another 10 weeks of this. So the futures prices for those are also not bearing out some price spike in store. So that's where I think there will be a general trend of chasing the transportation fuels into the better weather. And of course, the gasoline in particular has the most effect on the worldwide aromatics prices and whatnot. But, with refineries are largely restarted from that winter storm in Texas, we're not seeing any. Again, I'm not sensing any sort of panic. I think that the economics for ethylene and propylene are, even worldwide, they're not necessarily robust, but they're not bad. So that's, again, where even the exports that we saw, the ethylene going largely to Asia, just from what I could see in the arbitrage and doing my own assumptions on what the freight costs, these were not hugely profitable deals, but it really relieved the U.S. of a lot of ethylene that, you could make a small profit or a moderate profit and also get it out of the U.S., which I think, preserving the U.S. value is really paramount to the local market here. So I think that in terms of the oil and gas, that again, nobody's calling for, $100. If they're calling for $85 and now we're at $74, $75, that's it's something to watch, but I'm not seeing anyone go into a panic. One of the only areas that I am seeing a little bit of angst perhaps is European styrene. I think that that's a market that is very challenged with creating and preserving margins. And we're seeing producers there either extend current outages or announce that they're just shutting down for now because economics are not working. And I think that, again, looking at the short-term demand, that demand can be covered by other regions, so there's certainly, I think that if there's a theme almost to continue, the hopes of September are really what we're seeing now, is that there is no panic, there is no volatility of note there, that you're able to make assumptions that are reasonable, that, again, a few things to watch, of course, are the situation with ports and manufacturing in Asia. That's a big one. And how strong will the driving and flying season be when we get to April? But for this quarter, I see this quarter as possibly, as people are coming back to the office for the new year, kind of a sigh of relief feeling.
Yes, I think we talked about that a bit last time as well. It wasn't so much prices going up or down that was the problem. It was the volatility. It was the rapid changes and kind of whiplash of going up and down. So whether things go up, go down, it matters, but not so much as just being able to plan for it and kind of understand what's happening and not have so much craziness in the market.
Right. And that's exactly it. Our focus at Opis and at Petrochem Wire is really the spot markets, as I think they're the most excellent indicator of the market's fundamentals and feelings and behavior of the day. But for much of the world and the supply chain, it's really about what those spot prices do to the term contract prices, the bulk of your volume. So when you see after a fairly stable month, let's call U.S. ethylene, in the spot market, sitting around 20 cents, so, over and over, 21, 19, something in there for a number of weeks. And then we maybe have the costs being the ethane and the propane. They've dropped, just like energy, they've dropped throughout November and December. So at the end of it for ethylene, if we're seeing that the contract price in December was down like a penny and a half, yes, it's down. I'm not minimizing that that's down, but it's not down 10 cents, it's not down 8 cents.
Right.
Even in Europe, when contracts are down like 95 euro or something, it's not the things that we saw this summer. We all lived through that in June and July, where it was just incredible how quickly things got to historic highs. And it was unclear, and it was such a gamble. Do you buy today and sit on this very expensive material when it does the price drop by 50% over the next 2 weeks? So we're certainly nowhere near those types of trends right now. So that's where I think there are certainly opportunities to make money, and there's certainly risks to lose money. But I feel like they're somewhat mitigated by this relative lack of volatility that the market worldwide was hoping for and is realizing.
So I guess kind of recapping some of the specifics. So benzene, some of the derivatives have been muted. It's kind of a stalemate on who needs it more, whether they need the sales more or demand needs the product more. That's kind of where you're seeing benzene. Yeah,
again, when we look at where prices, just looking at the U.S. spot and contract, that they've been below the 350 mark for 5 months.
Yep.
So that's not to say they haven't changed. Of course, we did have spot prices go below $3 in December, and they're back up a little above $3. But when you look back at what benzene has been through in the third quarter and part of the second quarter, when it was, the price was practically doubling week to week, that, being on either side of $3 is not bad. And then if you're at 311 and, maybe going up to 320 or something, it's a muted type of situation. But the one common theme, and you'll see this in I think in any report that you'll read or anyone that you talk to, is that demand is quiet.
Yep.
It's not to say there's no demand, but demand is quiet. And if you've been in the markets for decades, you'll recognize this as a typical lull, So there's, again, not a sense of panic, but more a sense of you cannot look to demand to rise. The wild card, of course, is the pandemic or COVID. What strain are we in? What is this doing to demand? Are any new markets ahead of us? There's always unknowns, because we learned so much since the end of 2019 in terms of what we didn't know. So we can take a page now. It's, it feels a little jaded, but if you're trying to do your logistics, saying, well, what did we do the last time Shanghai port closed? It really wasn't very long ago,
Right.
So the resilience and adaptability to facing catastrophic fundamentals is something that people in the markets have pivoted repeatedly for the past 3 years. So this might be a welcome calm, but I think you also have that kind of wizened experience of, we're ready, 2023, we're ready. Whatever you got, we may have seen it before, not too long ago.
Yeah, right. Absolutely. Well, one thing we were just talking about this morning here at the office, I don't know how much you've followed this or how much your team keeps an eye on this, but we were talking to a couple suppliers in Europe about a new LNG terminal in Germany. I guess it was a $10 billion terminal that just opened in record speed that I guess will hopefully move at least Germany away from, 100% away from Russian oil supply or gas supply. Is that something you guys have followed and have any kind of thoughts on and how that may affect the German chemical markets?
Sure. Well, first of all, the German chemical markets are near and dear to my heart, because I really do think that they, to me, are the indicator of the European markets, that the German plastics markets, for example, to me are the bellwether of the region. But that said, I think the bigger point about what you're talking about with the LNG, certainly very important to note how quickly it happened. And to me, how quickly the money was spent. And this is something that I've been watching really for the past year, a little bit longer, a very direct response to diversifying dependency on energy from Russia is people that I know in the region or companies that I'm familiar with in the region. They've long had a plan. It was just a question of, this will cost us this much money to do this, and it's not been prioritized. Well, that became a priority, let's say 12 months ago. So the money was quickly spent. The plan was there. So it was putting a plan into action, not developing a plan, which I think is different. And once you create options, we've seen this in other markets that, get pivoting away from Venezuela, for example, that it's the kind of thing that will change your market for the long term. So, there are several painful years that we are in the middle of in Europe with respect to energy because what is happening. And this was, again, something you could read in mainstream media that who has been expecting the pandemic for a decade. Okay. But, similar. So my point is similar with different geopolitical things, that it's not exactly shocking what the situation in Europe is now, because it's been one of the considerations of what will we as a company or as a nation do if this issue does become our reality. So that's what I mean is the LNG terminal, I think, is an example of that, where maybe it felt as though it were something that happened quickly, but I believe it was more of a deployment of this is the time to do it.
It obviously should have positive effects within Germany, within the German chemical markets, having access to that new terminal now, having options with your energy background and things like that.
Absolutely. And I think, a lot of, as I say, a lot of companies have long said, if we were to diversify away from sources of supply to the north, like Russia, and diversify that with other sources, be it in Africa or Middle East, well, you don't go back from that. Your options are your options, and you're always then able to take the best option forevermore. So, these infrastructure spends to be able to source elsewhere are important, because these will change everybody's forecasts and expectations and abilities for decades to come.
The one derivative we didn't get into really much here is propylene, which I'm assuming I can maybe kind of read your mind a little bit and say it's been a lot of the same with not too much volatility, things kind of trickling down along with the rest of the energies. You're making a face that may be maybe not the case. So talk to me about propylene for Q1.
No, sure. Propylene is, to me, such an interesting commodity because it is related to ethylene as a co-product. It's related to refining. In a sense, it's related to propane. So it really has several different fundamentals happening for it simultaneously. But that said, most propylene is going to the service of polypropylene, right? And so even if polypropylene is not your market, chances are what's happening there, because as polypropylene goes, so goes your propylene, right? So that said, polypropylene demand worldwide has been, as the phrase goes, nothing to write home about. But that said, it's not unexpectedly depressed. It's just not rallying. So that's where producers, at least in the States, can very comfortably operate at a 70% rate, which of course is not ideal for them. But if a 70% rate can keep prices stable, that's better than a 50% rate. That gets uncomfortable at the production level. I think, again, the most painful part of in the polymer scheme right now would be the styrenics and the polystyrene. And I believe in this country, at least we've seen over the course of the quarter, the polystyrene price drop from over $1 to, near 80 cents. And that's a lot. And we're still attracting imports. So, but polypropylene is, I think that polypropylene looks at polystyrene saying, let's not let that happen here, so preserving price, and of course, propylene does get its own jolt from different production issues as well. So, you might think propylene is, down, 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 but then you see a little pop, then it straightens out. And then it maybe falls for a couple of days, and then somebody needs some, and it's up a couple cents. So, on a cents per pound basis for that polymer grade, it really has found stability above the 30-cent level, and that's something that it's, I think a few months ago it was closer to, certainly above 40 cents, but I think that something that if you see the propylene go below 30 cents and then quickly hit 25, that's a problem. But that hasn't happened at all. So
Sure.
That's where, again, I feel like it's more of the same story where it's not great news, but it's not horrible news. It's just managing, very much short-term managing, getting through this week with a margin, getting through this month with, hitting as close to your expectations as you can.
Do you guys have any thoughts in general on, I guess, looking beyond just Q1, kind of the year as a whole? I know we hear some mixed things about people optimistic that demand will pick up after New Year's, looking more towards summertime. Do you have any kind of thinking very, very macro and specific to the U.S. on if and when demand may pick up, how the rest of the year may shake out, or pull that crystal ball out and see what may happen this summer?
It's funny because I think you and I have talked about this. When I talk about macro stuff, I actually go more inward than ever. I look at myself and people I know, and there's a lot of hope for the spring. There's a lot of hope for the summer in terms of traveling, in terms of, maybe construction projects or real estate moves that were, put on hold because interest rates are rising, and let's just hold off right now. Maybe that jump starts again in that second and third quarter. And, and certainly you can find whatever news you want online, but there's certainly expectations of travel worldwide seeing another summer boom. So, and I think that that's something that creates a certain amount of bullishness. But again, especially in the commodity space, nobody really wants to overpromise. But I think that there's a little bit of buoyancy that is underlying second and third quarter decisions right now.
Yeah, it's a good point.
A cautious buoyancy.
Of course. No, it's a good point. We were just talking about things like the AFPM and trade shows and things like that this summer. We've heard a lot of people, both based in the U.S., that plan to attend, as well as European colleagues and Latin American colleagues that didn't come last year that are now planning on coming. We also hear, people at the office and Rob and things like that have rental houses and rental properties, and those are booked for the summertime. So people are obviously looking to plan to travel, get out and spend money and do these things. So even, there's a lot of doom and gloom with recession, interest rates, and all this other stuff. But at the end of the day, consumer spending seems strong. I think it was one of the busiest holiday spending seasons ever. So people are still out there spending money. It's not people looking to climb in a hole and just stay home and not do anything, not travel, not spend any money. There's obviously dollars and cents flying around out there, which should bode well for, like you said, kind of looking at spring and summertime.
Yeah. I mean, I think that on the demand side, the thing that I'm watching is really anything related to transportation, because as you say, when people are leaving the house, they're spending money, they're buying disposable everything, so it's a real knock-on effect in terms of demand for things great and small. The other thing that I just keep an alert on is what is happening with the Asia ports, really, and that, because I think that underestimating that is a mistake that people won't make again.
Tell me more. What do you mean by looking at the Asian ports? Are you looking at how busy they are, if they're open, if COVID's a concern? Yeah.
If they're open, like it's to me, I'm a fairly simple person, but seeing things, such as the zero COVID policies and governments pivoting to different styles of lockdown or protests or, and what percentage of the population is reportedly infected, thinking really about the workers, the policies, what is happening. I see obviously the plants in Asia, the production plants and all of that has much to do with world demand, but without the ports. That's why, to me, that's the bellwether that I'm always making sure I keep an eye on that. Without the ports, doesn't matter what demand is if you can't get anything in or out. Right. So, and that's, and especially, in areas where they've been in so many different situations, pivoting very quickly to from extreme decisions in short amounts of time over the past 3 years that, it's just, to me, that's always something to be very mindful of is
Sure.
that.
Sure, so. Absolutely. Well, as always, we appreciate you coming on. I think this is our second quarterly episode and excited to continue doing them throughout 2023. We'll have your website and email address and all that good stuff down in the show notes wherever people are streaming this. Where can are you traveling at all here in the next couple months? Where can people see you out in the wild over the next couple months here? Got anything coming on?
Out in the wild, I will be appearing at the New England Chemical Club in February. So if you happen to be in that area, I believe that's in Providence, February 12th. Also, I will be at AFPM IPC in full force, me, the PCW team, a lot of my colleagues at Opis. So, obviously we all know where everything happens. Find me, and you can always find us on our website and online. I enjoy, speaking with you all the time, but thanks again for this opportunity to do this, and hopefully I'll see you in person for the next one.
That's the plan. Maybe we can get creative and maybe try to do something at AFPM, or if not, we'll have you up here at the office and utilize our lovely podcast studio here. So either way, look forward to see you in person here at some point soon. And thank you as always for coming on, and we'll certainly talk with you soon.
Thanks again.
Thank you, Kathy.
Bye-bye.
Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.